Hey there, troops and traders. How you guys doing? This is Greg McLeod from the Elite Traders University, and we are going to get started in just a moment here. Just wanted to make sure that you can hear my voice and see my screen. We're going to start with the weekly Forex forecast. It's Bears versus Bulls, and I'm so happy to see you here on the Super Bowl Sunday. And we're going to be talking about the upcoming week of the 14th, February 14th, 2022. We're going to see that the LA Rams versus the Cincinnati Bengals are going to be playing in just a few minutes. But while the millionaires are playing with the leather ball, we're going to look at some market-moving millionaire type strategies in order to take advantage of this upcoming market. Okay, we're just going to get started in just a few minutes. I just want to direct your attention to the screen, and we are going to get started. And let's go ahead and get to our. Let's go there. Hope you can hear me okay. And I hope you guys are having a great Sunday, a great weekend, beautiful weekend here. And let's go ahead and okay, let's go back to our screen here. We're going to turn this off and turn that off and go right to. We're going to use my market heat map, which is a my number one tool for actually taking advantage of the market. And you get this free tool, institutional level tool for free for 30 days. Just come to mymarketheatmap.com and you can take advantage of it. It's a financial scanner, but it's an all-purpose tool for doing other things too, like being able to find sentiment, being able to determine, what's hot, what's popping, what's dropping, what's not, streaming news, Forex TV, just a lot of value. Okay, so I'm going to log in here, and in fact, let's go to the dashboard and. And before we do that, I just want to just run this. If you haven't seen the video, it's a really cool little video. In fact, you can even sample what's going on with the heat maps right now.
$6.6 trillion are made every day on the foreign exchange market. And although you love a piece of the action, a lack of knowledge and experience has you wasting more time than you make. What if trading like a pro and making smart decisions could be easy? No scanning endless charts or analyzing confusing reports. No time-consuming research or unreliable social media hot trading tips. Quit the guessing game, avoid risk, and get the answers you need to make huge profits starting right now. With My Market Heat Map, a trade scanner that provides a complete overview of 28 Forex currency pairs, plus gold, silver, oil, commodities, crypto, and other major local market indices. Quickly and efficiently identifying profitable market trends and lucrative trade opportunities has never been easier. Simply buy in green, sell in red, and stay away from gray. Earn more, lose less. For a limited time, get a 7-day trial of.
Okay, so that's my market heat map. That you can sample right there. Pounds in the top spot, and everything else is kind of neutral. And the dollar Swiss is down as well, 0.6%, 0.92413. Okay, let's get right to it. Let's get into it. First thing I want to check out the. Let's go ahead and take the Trader Tools economic calendar. We're going to check the economic calendar today. Okay, and the economic calendar is here, and we will just want to change it. Watch the high impact items. We can look at medium term impact, but I like looking at the high impact items because those are the things that are going to be moving the market. And again, the reason why I look at the economic calendar first, because it's like it's like a sheet that tells you like who's going to be on stage, right? What's going to be where's the party happening? Okay, you don't want to be trading currencies in which there's no action. It takes a little bit of time for these banks to move billions of dollars, hundreds of millions of dollars of currency into a particular currency pair. Okay, so that institutional flow, we can jump on and piggyback on that flow leading up to these announcements. Okay, so for Monday, February 14th, 2022, we have the first thing up is gross domestic product out of Japan quarter on quarter. Previous number was negative 0.9. Forecast call for an increase to 1.4%, and the impact is high. I usually discount Japanese data. Their goal is to keep their currency weak in order to to stimulate exports. And so good news that normally would benefit the currency, having a strong yen is not what they want. So I just would look at any type of strength in the yen to be short term, but we'll talk about that. We'll see a chart. Okay, but this is the one I would really pay attention to. It's going to be at 7:30 on Monday, February 14th. So as soon as you get off work in the afternoon in the U.S., you're going to be able to get your grub on, and then sit back with a chart and look at the Aussie dollar. That's what the party's going to be, because it's going to be the RBA, that's Reserve Bank of Australia meeting minutes. It's a high impact item. Basically, they're going to talk about why they came to the decision of their interest rate decision that they had last week. They're going to talk about the methodology and why they're doing it, and what could be happening in the future as far as interest rates. Remember, interest rates are the number one driver of currencies. Central bank interest rates, they drive the $6.1 trillion market. So you want to be able to be in tune with that and look at the Aussie dollar, Aussie yen, Aussie Swiss, pound Aussie, euro Aussie. Those currencies could be in play. So that's something we want to look at. And we're going to look at the charts right after this and see where the Aussie dollar is and how we can take advantage of it. On Tuesday, February 15th, day after Valentine's Day, we're going to have get data out of the UK at 2 a.m. Eastern time. So if you are on the East Coast, it's 2 a.m. If you're in California like I used to be, it's like midnight. So you want to look at what's going on with the UK with a British pound. Okay, we have average earnings, bonus 3 months, 3 years, 4.2%, and average earnings excluding bonus 3.8%. No forecast is given. An ILO unemployment rate and 4.1%. Now you may not understand what all this stuff means, and I used to know it, I forgot it. But what I do know is that when these announcements come up, they're like a rock that goes into the water. The water is a market. It creates a ripple, and that ripple is what you want to trade, because the volatility, the ripple, creates the movement, the currency, the movement in the market when these news events hit. And so we want to be, if we're sailing a boat, we want wind. Wind is volatility. No wind, no volatility, boat doesn't move. You're in a currency that's in the gray area and it doesn't move. And you're saying, well, why are these other currencies moving? Well, you're not checking the calendar. Most traders make the mistake of not looking at the economic calendar, so they don't know what's happening. So when things do happen, they go, oh my God, why is it moving? That one is moving and people are making money and I'm not, because you're in the wrong pair. You don't know where the party is, right? You got just flat chips and no beer at that particular party, right? This one is going to be pretty active, the pound versus US dollar at 2 a.m. Eastern time, leading into the London Open at 3 a.m. Eastern time. And now on that same day, on Tuesday, February 15th at 8:30 a.m. Eastern time, part of the U.S. news cycle, there's 2 time periods during the U.S. Trading session, the New York trading session, that there is big news that moves the market. One is at 8:30 a.m. Eastern time. The second is at 10 o'clock Eastern time. And so these 2 times, sometimes there's news there, sometimes there's not. Sometimes the market just pauses and waits for something, even though there's nothing there. So 8:30 and 10 o'clock are 2 times that should be on your clock, on your watch, for you to check the market, and maybe a few minutes before. Okay, so we have the producer price index, X food and energy, month on month. MOM doesn't stand for mom, it stands for month on month. And they say that it's going to be the forecast is a decrease from 0.5%. The previous number is 0.5%, looking for a drop to 0.4%. And when you see index, really talking about inflation numbers, they're talking about producer price inflation. And they take out food and energy because it's volatile, but I don't know who lives without food or energy. I use a lot of food and energy, as you can tell. Then there is the producer price index month on month. That includes food and energy, and it's expected to actually rise from 0.2 to 0.4%. That's just telling you that food and energy have been going up. If you look at the price of the pump, if you look at the loaf of bread that you're buying or the gallon of milk that you're getting, costs a lot more than it did before. We had CPI numbers that were highest numbers in 37 years, and so that could be very beneficial for the U.S. dollar, because the Fed has a dual mandate. The Fed is our central bank. They have a dual mandate. One is for price stability, and two is for full employment. Price stability means they want to keep prices level. When prices get out of control, that either going to the upside or to the downside, well, the Fed is supposed to step in and put the brakes on, cut the money supply, cut all this the spending in order to bring prices down by raising interest rates, causing supply of money to drop, which causes people to buy less and causes inflation to drop. However, if they raise rates and reduce the amount of money in the system, the stock market collapses. People panic. The real estate market collapses because you have higher interest rates, though you can't fund these houses for 30 years with with 6 and 7% interest rates. Okay, so the Fed is backed into a corner. What should they do? If they raise rates to cut inflation, though, the economy will knee jerk, and basically it's like a crack addict or somebody, a heroin addict that's addicted to liquidity. And if you pull it away from them, they have all these they have all these reactions, these I forgot what it was called. It's bad. That's my mind. But withdrawal. They'll have withdrawal symptoms. Our economy will have withdrawal symptoms. Those withdrawal symptoms, in the short run, are violent. In the long run, it's medicine, it's healing, it's restoration. Getting things back to normal. But the thing about it is, people are. We have an election year. People are coming up for election, and they're not going to create a lot of pain and discomfort for people in the short term, because they'll lose their job in the long term. So that's what's going on in the market right now. If you see these big jumping moves on inflation data, it's because we hadn't had to worry about inflation for like 37 years. Okay, so I just gave you kind of a long story there. I want to hurry up and get finished so I can see the kickoff. But let's go ahead and move right along to Wednesday, February 16th. We're talking about the UK and talking about the consumer price index, but retail sales comes out at 8:30. That's the US news cycle, 8:30. And when I'm trading the US dollar, I like looking at the euro, because the euro is called the anti-dollar. And so any positive or negative news for the US currency is usually maybe positive or negative for the euro currency. And it's hard to really trade the dollar index unless you're trading the futures. So retail sales month on month predicted to a rise from negative 1.9 to 1.7%. I was in the mall yesterday, and it was cray-cray. It was crowded. I had to park far away. There were people in line. People had shopping bags walking around. So just from anecdotally, from just looking, these are numbers for February, but these are January numbers they're looking at for retail sales. And if they're high, they could be very beneficial. Usually good U.S. news kind of benefits the euro, not the dollar. The dollar is your fear currency. People run to the dollar for fear and for safety, for risk, a risk-off move. But then if they want yield and they want to take more risk, then they buy other currencies. Okay, 8:30 also Canada, Bank of Canada Consumer Price Index as well, and they're looking at 0. They're still under lockdown. They got trucker strikes and things going on over there. Supporting those truckers. Consumer Price Index month on month, 0.6, and Consumer Price Index month on month. So we have 3 different announcements coming out at 8:30 for Canada. So the Canadian dollar is going to be in place. I will look at dollar CAD, CAD yen, CAD Swiss, Euro CAD, Aussie CAD. Those may be currencies which will provide some good trading opportunities. Moving right along. At 2 p.m., though, we have FOMC minutes at 1400, which is 2 p.m. Eastern time. And usually the market's kind of dead because, nobody wants to get ahead of what the Fed may say in their minutes. And that comes out at 2 p.m. So you might even see, even with all this data, you might even see a flat market into 2 p.m. So if you look at some of these moves and they're not very big, it's probably because even though these are high impact items, there are higher ones. They're high and they're very high. And the FOMC meeting is higher than all the others because it's a larger economy. And so the minutes could tell us whether the Fed is going to put the brakes on and raise rates, maybe 50 basis points or so. Talk about whether there's going to be more rates to come. And so traders are going to be looking for that. and so they kind of probably want to wait because the dollar did take off Friday, so anyway, it's a continuation of that takeoff. Now, following that, you're going to have at 7:30, you're going to have the Australian unemployment rate. The previous number was 4.2, expected to rise to 4.5%. Employment change go from the previous number was 64.8 thousand, and its forecast is called for a drop to 43.3 thousand. Finally, we'll round off the week with of February 18th with a 2 a.m. from the UK. We have retail sales month on month. Previous number was negative 3.7%, and no forecast is given, but the pound would be in play, pound yen, pound Swiss. And then at 8:30, the U.S. or North American news cycle. I should call it North American news cycle because there's other countries other than the U.S. that trade during that time. All of North America will be online then. We have retail sales month on month out of Canada. Previous number was 0.7. Expect the forecast to rise to 1.2%. So that's the fundamental or the news-based analysis. So we're going to be looking at the Australian dollar, the British pound, the euro, and the Canadian dollar are going to be in play. About 4 currencies. I'm sure you could trade other currencies as well. That's what you want to do, but this is where the party's going to be. This is where you're going to see the most of your volatility in the currencies what I just talked about. So let's go ahead and take a break and head over to the charts, okay? I'm going to use TradingView, and we'll go ahead and take a look at, first of all, I take a look at the U.S. dollar index. The U.S. dollar index is a basket of currency pairs versus the U.S. dollar, and its ticker symbol is DXY. So I'm going to go and launch the chart here, and there we go. Now we've got a couple of things going on here. We've got, we had some. We're still in an uptrend, higher highs and higher lows. And again, this is a daily chart. Sometimes I drop it out to a weekly just to get a really good perspective of what's going on here. And we can see that we have a nice double bottom that we've been that launched us up from the 89.51 area, and we got as high as 97.43. But we came from an old high about 103, and we were in a very strong downtrend. Right? And the reason why I'm looking at the U.S. dollar is because the major currency pairs, the reason why they're majors is because they have the U.S. dollar in them. Either the front or the back of the currency pair has USD. So USD and DXY are the same. DXY is a basket of currencies versus the U.S. dollar. And so you might think of USD, EUR, USD, JBP, USD, right? So if you know where the US dollar is going, then you know where 8 or 7 currency pairs are going. You know where, if this is going up, then pound dollar, euro dollar, Aussie dollar, Kiwi dollar, all going to go down. Okay, that's the way it is. It's kind of, one is up, one is down. It's a teeter-totter, right? Now, if the US dollar is going down, then we can see a rise in Australian dollar versus US dollar, pound versus US dollar, euro versus US dollar, all should be up, right? But dollar CAD, since it has the dollar in the front of the pair, then we would expect dollar CAD to drop if the US dollar were weak. And we expect dollar CAD, dollar Swiss, dollar yen to rise when the dollar is strong. So by looking at this is like our cheat sheet. We can look at, okay, we've got, that's the thing about with any type of instrument. And some time frames it's up, and some time frames it's down. And what time frame are we in that's having an effect, right? So we have this downtrend, we broke it, we're an uptrend, and then we're rallying up against significant resistance. So we take a Fibonacci from the last swing high, hit a high of 103.37 back on around March 23rd, 2020, and we connect those dots like that, and we can see that we're coming right upon a very significant 618 Fibonacci, a retracement of this down move from here to here, and then price has been bouncing off these Fibonacci levels of support. Now, I have a base, and you probably said, Greg, Fibonacci, I don't even understand some of the stuff you're talking about. And these are the things that you need to understand if you want to be successful in the Forex. And if you don't understand it, then you need to get education, right? And one way you can get education is by actually enrolling in the Elite Traders University, our Forex Foundation course. And we have a special on that. Just email me at greg@elitetradersuniversity.com and ask me about the Forex Foundations course and how you can get involved. In fact, we're going to give, it comes in 4 modules: freshman, sophomore, junior, and senior level. And so we're giving away the freshman level for absolutely free. You just let me know that just email me at greg@elitetradersuniversity.com and say, hey, I want to get enrolled. I'll send you a link to get enrolled. Cost you nothing. If you want the other modules, there'll be a little cost to that, but let me know. And that way you can get an understanding from me. I have 25 years in the business, and I'd love to help you out with this free course. The free course actually has a lot of material in it. The free that will help you learn the Forex basics. And if you want, that way you can sample it. And if you like it, then you can say, hey, let me go ahead and enroll. And foundation course, right? Okay. Anyway, just email me. I'll send it to you. Right now, I just want to stay here. So this is the dollar index now. So if we break below this trend line, we should be back into the buy mode. But right now, we have a harami pattern, kind of like a small body candle in front of a bearish candle. I mean, this was like seesaw. Look at this volatility up and down, right? Bullish engulfing, then another one, and now we have this harami 2-candle pattern. And it looks like it wants to maybe continue. But again, if we break the low of 95.08 on the dollar index, then we should be in the clear for risk on. But as long as the dollar is up, we might see the U.S. stock market down. So if you're trading the S&P 500 or the Russell 2000, you're probably seeing some weakness. These are weekly candles dropping down to a daily. And we see we're getting a nice little bounce off of this support line. But again, if we break maybe 95.18, this could be over. But we are rallying to some resistance. Go down to a 4-hour chart. Again, it's like one of those things. We're in a triangle, and a triangle means indecision. And so, again, we're looking for some type of a break of this trend line. It's very weak, trying to rally back up. And so the bears, bulls versus bears, U.S. dollar index, we are short-term bullish, but medium-term, the rest of the week, I'm pulling bearish on this one. So let's go ahead and let's get that bit. Yeah, I'm a favor of the bears, right? Let me our bear. Hello, Mr. Bear. There you go. Roar. Okay, that's the U.S. dollar index. Again, short-term bull, medium to long-term bear on that one. Okay, so let's go ahead and let's get to the euro, the anti-dollar. I know there was no European Central Bank data out, right? However, any U.S. data, my currency of choice is to trade the euro. Okay, because the euro is the anti-dollar, and you get all kinds of. Let me remove all the drawings here, right? So this is I'm going to push out to a weekly chart. I got to do this pretty quickly. Kickoff in just a few minutes here. I don't mean to be rushing. After football season, I'm all you guys. I'm going to be doing live trading and everything. I just spent, I know a lot of people have been, Greg, can you bring Pip N Run back? I'm like going, 5 a.m. Eastern time. That's probably when it's going to happen, right? I'm excited about it. I don't know if you guys are. The return of Pip N Run. I know I actually had one guy tell me, Greg, bring Pip N Run back because I had to go back and get a job. I go, you were making money on Pip N Run and you weren't even like subscribing. It's like, well, yeah. I was like, okay, well, that's why your ass is going back to work. No, just kidding. No. Actually, he became he actually did join our Pip N Run Forex scalping and mentorship, and he's doing rather well. Okay. Anyway, so there we go. That's a Euro weekly, and you can see that we have a higher low, but we're stuck right here, and we have a bearish harami there. But if we had a break above 1480, this thing is probably going to go to the moon. Okay. Moon, why? Because we have basically we have higher, we have a low, a higher low, and this low we have a speed line drawing from here to here. We could not even get back to this old trend line. Buyers have stepped in here at 111.42. Buyers stepped in strong here. A little rejection because of that, of the news of the hot CPI, but we break. This thing is go to Pluto. I mean, right? There's intermediate resistance here, right here at the 119.32 area. Again, this is we're on a weekly chart. Well, we need to break this level here, and if we break it, then we'll be in good shape. Let's go to a daily chart, and you can see we've made a lower low, and price may back up a little bit. So again, short term bearish, but medium to long term, I'm looking for this thing to go up. We break this double top at 114.73, and good night. It's be on and cracking for the Euro bull. So I'm again short term, like a day, maybe like two turnaround Tuesday, manic Monday, opposite direction. Turnaround Tuesday, we should see a launch on that. So I'm looking forward to that, and maybe even doing Pip and Run there so we can actually ride together. Sounds good? Let me know. All right. And if you want Pip and Run to come back, send me an email, greg@elitetradersuniversity.com, and let me know that you want that to happen. Okay. And I got my Pip and Run hat. Got my animated logo up there. So let's go ahead and get the Bulls versus Bear. I got my neon bull. Oh, that's a bear, man. No, we're not a bear. We got the we're hitting our horns up. We're bullish on the euro. Okay, let's keep it moving, keep it spicy here, and oh no, not make you disappear. And let's go ahead and move on to the next AUD. AUD is going to be our very first one. AUD USD. And again, we had a very strong down move, because I've been hitting this a lot. There's our downtrend line, right? And then we have our uptrend line. So we have a battle between the bulls and the bears. We have a supply line, we have a demand line here, and I'll make that green. So we have our supply and demand, and where supply and demand meet, this is where we're looking for a significant breakout from this area. And we have a double bottom there. It's giving us some type of confirmation of support in the 69.90 area. The Bank of Australia (RBA) has been hawkish about raising rates to control inflation, and so we could see a move outside. Now remember, we got FOMC coming up, so again we might be short. We had a wick rejection, so we might see short-term bearish, medium-term bullish. So may have something like this where it may pull back down to support and then launch out into this zone outside of this triangle zone, right? And then you can look at Fibonacci price targets and things like that, and that's covered in the free Forex Foundation's freshman course that you want to go ahead and send me an email if you want to go ahead and take part in that. All right, and so again, I am short-term bearish, but again, end of the week, I'm looking at the bullish move. Okay, so there's potential to scalp to the downside. I mean, you can go down to like make a 1 hour chart, and I mean, not going to see a whole lot, but I mean, we have this little trend line there, demand line, but this might break and prices may go a little bit lower there. Okay, may come down to 70.50. That might be a good opportunity for bulls to step in and take this north. Okay, let's go ahead and look at GBP USD. Whoa, source code, no, danger, Will Robinson, danger. Okay, hitting too many buttons there. I was somewhere. Pound versus US dollar. Well, we have a bunch of stuff going on there. And let's go ahead and just remove all drawings, right? go up, and let's go out to that 50,000 foot view. I like getting that 50,000 foot view, and you know that if you play any of these games, you know, the guy who's on top of the hill, you know, whoever has control of the high ground, you know, they control the game, right? So if you're able to look at the high ground, a lot of you guys are stuck here in these small wicks here, and you don't know. I mean, it's up and down, right? But from a higher vantage point, you can see that this clearly was down for a time, and we also, I'll make that red for a supply line, but we also have a rising trend line that goes back, back to 2020, back to March, right? And it perfect. I mean, we bounced off that, and then that would be make that green because buyers step in and buy. So we have 2 points to make a line. We would like to have a test of this line, one more test, and that would give us a confidence that price can break out of this channel and move to the top side. So again, I'm looking short-term bearish, very short-term bearish, and then maybe medium to long-term, looking at breakout, maybe going back to 142 from the weekly. But again, if you try to get long now, you'll probably get stopped out unless you have some like 100 pip stop or something crazy, right? Which I'm not advocating. I'm not really advocating anything. I'm just sharing my opinions with you here. Again, no trading advice is given. Just what I'm looking to do. Okay, and I've been doing this for a quarter of a century. I know it doesn't look it. I use oil of Olay. Anyway, no compensation for that is not a sponsor of this show. Okay, so drop it down to like a 1 hour here. And like there's nothing going on because people are waiting for the FOMC. That's what's going on. You're just barely stuck in a range, but it's kind of like a flag formation, big move up, sideways consolidation, and we look for a launch equal to the height of from here to here for some type of with the Fed, the Fed's gonna be printing money, and the worst thing people want to do is be stuck in the U.S. dollar, right? So banks and things are going to be like looking for like, how can we get up out of this? But we can't do it yet. And they don't want to signal you guys that they want to take it north either, right? So they're going to take it south first. They call you guys out. Hey, it's going down. It will for a little bit, and then you'll get stopped out. Because remember, Forex is a stop-driven market. It moves because it has to have an accumulation of stops. I mean, you have a lot of people that have some stops up here who are shorting. And while they're shorting with all those stops, we just push it into those stops. And then guess what? You have to buy, you have to cover your shorts, right? Short covering rally is one of the strongest moves in the market. So there has to be a lot of people on the wrong side of the trade. In fact, you can look at my market heat map, and we actually have something called the sentiment tool. And you can actually see, where that sentiment is. We can go to credits, we go to instruments. Let's go instruments. We can go instrument. All right. Okay. And then we can that's too many instruments. I need maybe currencies. Yeah. Right. Yeah, that was good. Okay. So Aussie dollar, right? Got a lot of people long, shorts, and then the pound versus US dollar. 25% of people are long, and 74% are short. So guess what? Somebody's going to get their clock clean, and it won't be the longs. It'll be the shorts, right? Because so many people are short. Losers pay winners. So all these guys are going to pay these guys, right? Very interesting with the Super Bowl. A lot of people are long the Rams, right? Few people are short or long Cincinnati. Be interesting to see how the game turns out. Okay, I'm going to get ready to go to it right now. Okay, but this is part of my market heat map. Again, you can try it free for 30 days, and if you like it, just keep it for $19.97 a month. I tell you what, you'll make more money than $19.97. People think I'm crazy for offering it this price, and then you can actually get the full Forex Foundations course by subscribing to my market heat map. So. And then you can cancel anytime you want to. Again, I don't need your money. I make a lot of money anyway, but this is to help you. This is a tool that I use in my trading. It got back here, and you can use it too, and it doesn't cost you an arm and a leg because at the brokerage, for this type of information, we're paying $2,500 a month. Okay. Anyway, pound dollar, again, short term move. I am short term bearish, but I am a raging bull. Whoa. There you go. Okay. All right. So let's look at the Canadian dollar. That is something that is coming up. We have a lot of Canadian news coming up. USD CAD, right? And let's go out to the daily chart. Actually, go out to the weekly. I'm going to wrap this up pretty fast. Running out of time. So here it is. Here is our US dollar weekly versus the Canadian dollar. You know, Canada has some issues with the truckers and stuff. I tell you what, when that settles, then we should see a relief rally in the Canadian dollar. Right now, the US dollar is rallying up, but I'm bulls versus bears. I am bearish dollar CAD. No, I want this green. Come on, Greg. And this red. Yes, right. And then we look for a trend line break somewhere around. If we can break 124.49. This is key level of support where bulls stepped in. They got their stops right there, and I want to be hitting their stops on the way down, right? Because it's going to could possibly drive price down to the previous low that we had back in about May 2021, and that'll be good for a goodly amount of pippage right there. 20, and once we break that, then good night. Then it's and we have a really nice double top right there that's confirmed, and we continue to move. I mean, there is a gap of price down to 112.28, and this is also an oil play. Canada is like one of the number 3 producers of oil to the United States, suppliers of oil to the United States. And so if you look at an oil chart, it's going, we'll probably hit $150 a barrel sometime this year. So, if you get your electric cars, it doesn't matter because guess what? Electricity is going to go up. Everything's going to go up. So no way to really run unless you have your own solar supply of electricity for your car, which is produced using coal, right? A coal-fired plant or natural gas-fired plant. But this is, dollar CAD. Look, I mean, this big gap that we had, this really big run-up in 2014, we're looking for symmetry where price makes the same move from 120 to 112, about 800 pip movement. Oh, you can't see that because I got this bull still up here. And I'm not bullish, okay? Sorry about that. Yeah, we had a nice double top right there. Price rejection at the 147.12, and now we've got oil prices surging. Canada is the 3rd largest supplier of oil to the United States. This could be a pretty big run, and the dollar could get very much spanked. And so we're also seeing gold on the move, on the rise as well. So a lot of people diversifying away from the U.S. dollar. The rats usually are the first to leave the ships. And you can see we're breaking all kinds of demand supply zones are getting crushed. All these zones that were here, crushed. All this zone there, we're hitting that zone. We broke that zone. I mean, all these zones that were here, we're breaking out 1860 on gold. And so we can see that commodities are going to be screaming because commodities are priced in. We broke out above 87.95 on oil. Nice pullback, nice way to get back in here at 63. Now we're closing in on $94 a barrel. That is incredible, right? And we were at 0. We came up from 0 long ago. You see, we have this huge gap that we fell from 149, about 150, down to 34.96. Look for that gap to be filled by price action on this other side where we see symmetry. Symmetry in price. I teach price symmetry where we can look back to what was going on here and actually see the same symmetry happen on the other side of the market going the other direction, right? This symmetry. So we have this wonderful symmetry that's going on. There's some congestion in the 109 area, but that's like $15 away. But we're in a roaring uptrend on oil. And this is one of those buy the dips. This is a very strong trend. Unless we can reopen U.S. shale, not going to happen. Yeah. Unless we can open up the Keystone Pipeline, not going to happen. So we will continue to see this price rise. Okay. Anyway, that's it for me. I want to thank you so much, guys and gals, ladies and gentlemen, traders and traderettes, for being here with me, sharing. Come over to the Elite Traders University website. Take your trading to new heights, all the right tools and training to start trading professionally in 90 days. You can apply now if you want to. We are picky about who we let in. We don't let in anybody. But if you would like to have a strategy call, there's a master class you can learn here, free master class, 4 Pillars of 6 Figures. Again, also, we have blog posts and our income strategy ebook. Get the ebook for free and learn some of my strategies about trading the foreign exchange market absolutely free, sent to your email inbox. And so I want to thank you so much for taking the time to watch this video. And let me know how you're doing in your trading. I'd love to hear from you. And I wish you peace and pips. Cheers. Happy pipping.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!